Hey everybody, hope you're having a wonderful time in the market. So I just discovered this Dividend Value ETF that actually beat the market in 2023. I was on some forum and some guy said he owned this and I was like, let me go check this out. He was bragging that it, beat the market, so I needed to go look. So ticker symbol CGDV, Capital Group's Dividend Value ETF. So a Dividend Value ETF whooped up on the market in 2023. The total return, 28.8% versus 26.32% for VU. Now, this is an active managed fund, but it only has an expense ratio of 0.33%. I personally think that's pretty low because I've got some broad, value market ETFs, and they're like 0.28 or 0.2% themselves. So not bad. Now, unfortunately, there's just not much data on this ETF because it's only been around since like February 2022. Now, if you read the paperwork on this ETF, one of the very first things you'll see is this isn't diversified. I thought that was kind of funny. And the reason they're saying that is because there's only about 50 to 52 holdings. So this is not really a broad ETF. It's not what I call a one and done ETF like, say, VTI. You would want to hold this in something else. 86% is large cap. So it's not really that diversified according to size. I think there's just a little bit of mid cap in there as well. Now, despite the fact that it only has 50 holdings, I just did some looking up on Portfolio Visualizer, and it actually was less volatile in 2023 than the market or SCHD, you guys that like that. It had a standard deviation of 13.64% versus 14.15% for VU and 13.83% for SCHD. So maybe that active management is actually reducing the volatility. I don't know. Maybe those guys are doing a great job over there, right? Obviously doing something right for last year. So what's the sector breakdown look like? I really actually like the balance of this ETF personally. I think it looks pretty nice. 23% tech versus about 30% for the market. So just a tad bit of less tech, but not so less like CHHD that you don't capture the growth. Only 5.5% financials versus about 12.5% for the market. So you're not really getting a whole lot of those banks and credit card companies and all that kind of stuff. Now, where you're going to get some differences with this particular ETF is industrials and materials. 23% industrials versus 8.4% for the market, 6.8% materials versus 2.2% for the market. Now, the only thing with this is that industrials and materials can be cyclical. So, if you catch this probably on the wrong year and they don't maneuver properly, and they're still holding these heavy industrials, that might be a bad thing. With that said, the Dow has been doing quite fabulous, right? What are the top holdings for this ETF? Now, it's funny because the name is Dividend Value ETF, but what are the top holdings? They're Broadcom and Microsoft at 6% each. RTX is about 5%, Carrier 3.8%, GE 3%, Meta 2%, Abbott Laboratories 3%, AbbVie 2%. So there's some companies in there like AbbVie. Now, what's really interesting for me is right off the bat, I saw about 6% designated to tobacco stocks, BTI 2.76%, Philip Morris 3.12%. So this has got those tobacco stocks. I kind of feel better now just seeing that in this ETF as far as my BTI is. What you will notice is there is no NVIDIA or Tesla. Apple is at a much less concentration at 1.9%. I personally like that if I'm, already holding a broad market. Now, 90% of this portfolio must contain investment-grade debt. I thought that was really cool because, during a recession or high interest rates like we have right now, this is what you're kind of wanting. 10% can be international, and I think right now there's about 6% in international. BTI, of course, is one of them. The turnover is about 30%, whereas SCHD is 28%. So not a ton of flipping stocks. It's, of course, not passive, 0% or 10. But at the same time, it's not like 50%. So they're doing a pretty good job not flipping stocks too much. The dividend yield, I've got some weird numbers on. I'm sorry. I honestly don't know which one of these is accurate because every time I look at a website, it's different. 1.8 to 2.2%, that's where the yield is at. And basically the goal, from what I understand, is that this ETF has a slightly higher yield than the market. The market's only at 1.46. SCHD has 3.5% for those of you that want to compare. So it's just probably disappointing for those of you that want a higher yielding ETF, but at the same time, understand it has things like Microsoft, Broadcom, and Meta in there. So it's capturing growth and you're getting a little bit of higher yield. What do I think about this? Well, I think it needs to be tested more. It's only been around since 2022, so it's going to be interesting just seeing, where it goes. I was looking over, there are some companies in there that look kind of expensive to me via the PEG values. It's only 85% large cap, so it's not diversified by size. I personally, I don't like that for my own portfolio. I guess my question for this is, who is this for? Because dividend investors are going to want a much larger yield. So a lot of those high-yielding dividend investors are probably not going to want to like this very much. Maybe those that think during a bear market, active management can outperform, and it certainly can. The odds are just not all that great. But at the same time, this did really crush it in 2023, so it might be a dividend ETF to look into. It looks pretty good to me. I personally really like the balance of the sectors more than something like SCHD. Of course, I'm not really looking for gigantic dividends. Once again, the materials and industrials can be highly cyclical, so this could be a problem if conditions change, right? But that's what the active management's there for. So hopefully they'll just get on out of that stuff, if they need to. I really am looking forward to this. I do not have a position in this right now. I've been trying to reduce the positions in my own portfolio, but I'll keep an eye on it and, at some point, maybe consider it a bit more. But that's CGDV for those of you looking for a new interesting ETF. Take care.